Good afternoon, everybody. There goes our closing bell. Welcome to Selecting an Option Strategy. I'm Connie Hill. I'm happy you joined me here today. You know, we take into consideration what the markets are doing and determine maybe what kind of strategies might work best. So my question to you right now is, what strategies are you having success with? So if you're here in our live audience, I'd like you to chat that in. If you're listening to this at home, and I know lots of you do, you could be thinking just to yourself, yeah, which strategies seem to be working best for me right now? And I'd be interested in that input. Well, as we meet together at this time, there's a lot of things that we can discuss. I am joined in the chat by, who is here? I think it's Cameron. Yeah, Mr. Cameron May. He and I had major chat duty today. So Cameron May is out there. Appreciate Cameron being there. You know, I'll try to keep my eye on the chat to see what kind of questions that might come in. Cameron might pick up any questions I can't quite get to, or maybe a little bit off topic. He'll help me out there. But we do want to hear from you. If you're listening to this on the recording and you have questions, go ahead and type your questions in the comments section in YouTube, because I go back and review those and make sure you get your questions answered pretty quickly as well. I hope you're following us on X. I'm Connie Hill CS. Cameron is Cameron May CS, and we'll post educational content, things we notice in the market. Some of my posts come pretty early in the market day when things start to get rolling. So follow us. It's free. It's easy. Let's go through our disclosures and get going here today. Options carry a high level of risk and are not suitable for all investors. What we talk about is for education and informational purposes. Don't consider it a recommendation. We'll be using the Payport software money application. It's what you download to your computer. It's the most robust version of Thinkorswim software. And our example trades will take place in it. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Probability analysis, as we look at some of those, probability of expiring out of the money or in the money, things of that nature, they are theoretical in nature and are never guaranteed. All right. I'm going to look over the chat, see what you're saying you're having some success with. Okay, so we've got David, short put verticals are working for you. Will, short put verticals are working for you. CSP, I guess that's a call spread. I'm not sure what that is. I think CSP might be call spreads for you, Diosa. If you want to give you more clarification, feel free to do so. Life in the fast lane says short put verticals and long call verticals. Very interesting that you guys asked where you're finding some success. I'm happy to know that that is the case. Now, we will take a look at some market conditions. We're going to look at a lot of examples here today and do an update on a couple of our positions, which I think is really important, because when we're talking about different strategies, we don't want just the when you get in, right? We need to be aware of how do you manage it? What decisions do we need to make? Okay. So we will be following up on that. David says maybe a cash secured put might be working for you as well. That's fantastic. All right, let's take a look at the market here. And we've got our SPX chart up here, and down at the bottom, I have what's called this market forecast enhanced. It's a script. You can put it on your charts. It's a little bit more enhanced than the market forecast that you have, that everybody has out on their Thinkorswim, as a study that they can bring up. In a nutshell, the red line is super quick. It's like 1 to 2 days. It can go from top to bottom. The blue line's kind of like a swing trading time frame. You just got out of swing trading with Mike Fairborn, if you were here earlier. And so that it kind of follows that kind of a time frame, maybe 3 days to 8 days, maybe up to 10 days. As far as it going from a top to a bottom or a bottom to a top area. And then the green line is more of our intermediate trend. Okay, and so many people, because they're not just necessarily focused on real short trades, many times they'll focus on that green line quite heavily, that intermediate line. Now, above 80 is what we call our overbought area. are below, actually we don't. We call it the upper reversal zone. I'm sorry, we call this the upper reversal zone. The bottom one that's 20 and below is called let's see, the lower reversal zone. I'm sorry, I got a brain fry on that one. Yeah, the lower reversal zone. Now, whatever direction the lines are going, that's kind of what it's trying to show us on the study, is maybe what the forecast might be. Again, it's all theoretical. It does not mean that whatever time frame we're looking at, that it's exactly going to do that, but it's helpful for us to see. So this green line that a lot of people might pay attention to has been up here in the upper reversal zone for a long time. Okay, we're talking since the first part of May. So all this summer, it's been there. And what have we had for the most part? We've had some bullish market conditions. If this green line comes down below 80, then a couple of things we're going to be watching for. We're going to be watching for maybe being a little bit more defensive on some positions, maybe putting on some insurance, putting on some collars. If it does that, there might be some that are maybe doing shorter term trades that they might say, oh, well, maybe I'll just get out of it. Maybe I'll just lock in some gains if that green line starts to head down. Okay. That's where the SPX is. The NDX has been very similar. You can see this green line up here in the upper reversal zone for many months here now. Interesting, red line is in the lower reversal zone, and its value right now is 6.91. And it can only go to 0. Okay, and so it's not uncommon for it to maybe hit 0 and then totally reverse. Okay, but both of those shorter type time frames are pointed down. But you know, the intermediates at 95.28 and rising still. Okay. The Russell 2000, I want to spend a moment here because we are going to talk about this, is a little bit more sideways. If we look up here in the price action, it hasn't been grinding to new highs every day like the SPX and the NDX are. Is kind of in a little bit of a sideways pattern here. And so maybe it's not quite as strong. It is at 87.70 in the upper reversal zone where it's bullish, but it is falling a little bit, and it's getting closer to that 80 line, closer than the other two were. And then we can see both of those lines right now pointing down, so maybe very short term, maybe a little bit of a pullback is what we might be looking at. Now, the VIX today, we ended up with the VIX up. Not a ton. It wasn't like it really spiked or anything, but it did have a little bit of a bump as our markets towards the end of the day here. You probably noticed most of them just they had been kind of flat, and as the day wore on, major indices started to sell off, and you probably noticed that. At that same time, our volatility index went up a little bit, but it's still in relatively low areas. It's not like a big green candle here or here where it's like boom, yeah, lots of volatility, lots of put buying. We're seeing, you know, a little bit. Okay, so we want to acknowledge that. Scott says, you know, due for a weekday, which we had today, but something seems a little wobbly to me. Okay, what's tomorrow, you guys? Tomorrow is Fed decisions day. Could the market just kind of be on a little bit of a pause, waiting to see what the Fed's going to say, if they're going to lower interest rates or not? Now, I think, not that I've polled everybody in the internet universe, but sources look to, and the experts are saying, you know, it's not likely that they're going to raise interest rates. What we don't know is how the market's going to react to that. And so the market might be on a little bit of a pause until, one, we hear the statement and we hear the verbiage and we hear if things are a little bit more dovish or hawkish. Okay, then that might be what the market reacts to. So yeah, so Fed meeting is tomorrow. The announcement will come out at 2 Eastern time. Okay, so it'll be a couple hours before the market closes, and many times we'll get a real quick reaction. Just as soon as that news is out, we will see a big jump in the major indices and what they're doing. Okay, so we've got that in mind. Now, I'm going to hop back over here to our slides for a minute. so that we can talk about different strategies. We really haven't been in bearish market conditions, so we really have not done a whole lot with our bearish strategies. I don't mind that because we want to be market appropriate. Okay, we've done a few things over here on the bullish side. Today, because we're seeing a little bit of a pause, and because of a comment actually somebody made earlier in a chat session that I was in, talked about something specific, we're going to explore a little bit over here in this column, a little bit more neutral, less directional. You know, a short put vertical is kind of neutral to bullish, right? It's not strongly bullish. And some of you are having some success there and shared that information with us, which is great. Okay, so we're going to go out. I want to review a couple of decisions we need to make on our trades, and then I want to get into strategies here, what we might consider. So as we head back over here to Thinkorswim, let's get my mouse. Let's go to the monitor tab. And I should have cleaned this up a little bit more. There we go. Here is our trades that we've got in the works here. One that stands out is this one on top, AMD. This is kind of obviously our biggest position, our best performing position. What have we got here? We've got a longer dated option, November, the 120 call. When we bought this option, it was a little expensive. It was $17.80. Right now, it's at 60.87. And I'm going to give you three choices of what you think we should do with this. We're going to look at a couple of things here. First, we're going to go to the trade tab, get back on our AMD. I want to show you where the delta is. So we're out here in November contract. Our delta is out here at a 93. When we got in, I think it was just like the first 60 something delta when we got into it initially, which was a while back, right? So right now it's sitting at 93. As an option gets into deeper and deeper into the 90 deltas, what happens? Do you know what happens? If you think you know, shout it out to your computer monitor, your dog, your fish, or go ahead and chat it in here. As we get deltas that get a little bit bigger and bigger, what happens to that option? Now, one thing we know with the delta, obviously, is for every $1 move in the stock, we expect our option to move, could go up, could be down, whatever the delta happens to be on that first dollar. Well, we're way beyond the first dollar, aren't we? But if we were just looking at it from scratch, starting over, if the AMD went up $1, we would expect our option to go up quite a bit. Now, the question is leverage still working well for us, or is it not working as well for us? Okay, that's actually what the question I wanted you to answer. Yeah, John says, the security goes up by 90 cents. Yeah, because we're in the deep 90s. That's what happens with the price of that option. Agariba, I'm going to answer your question a little bit into our discussion when we look at particular trades about that IV on short put verticals. Okay. The answer here is our leverage isn't working for us as much as it was in the beginning of the trade when we had a lower delta. Okay, it's not giving us the same I'm going to say firepower, which is kind of arbitrary to explain, but our leverage, where it was so good here in the early days of this option, it just loses some of that ability because it is so deep in the money that it's just kind of incrementing little by little, like whatever, pretty close to what the stock is moving. So let's go look at the chart here. On AMD, we're going to see where the stop loss is here as well. Actually, let's see. I think we took our stop off because we're going to take a look at it here. We have had just different stops on it. We've been adjusting it by the price. We got in here. This was June 11th. It pulled back initially, but then it gave us this big run. Along the way, we've sold some calls. We've sold some calls. We've bought them back for cheaper. We sold calls kind of when it was running up to resistance, and then we bought the call after it had come back, and that helps to give us a lower net debit, right? Because we can kind of count it as going against the premium of the full premium of what we paid for the long call. Here is the last time that we bought back the call that we had sold against the long option. And it's had this nice little run here. And what kind of a candle do we have here today? Kind of a look of a little bit of a shooting star, right? It gapped up, it ran up, gave it a new high, 182.31. And what did it do as the day wore on? It began to slide. So it kind of gives us an idea that maybe for the moment, the momentum is slowing down. Okay. So based on that, some people might say, well, now's a good time to sell another call. Okay. So that's going to be one of your choices. Should we maybe just sell another call and see if we can collect some premium? And as it pulls back here, yeah, that helps us out. Or we could roll it. Okay. When I say roll it, we could basically take the profits on this long option, which is substantial. And we can do it in one mouse click or two. Okay. What we could do is say, all right, we're gonna capitalize on the gains that this has at $60.87 on the price of the option right now. And then if it's still working for us and we still like it, then we just go and buy another one. We don't have to stick with November. We kind of look and see, well, what's out there? Maybe is December better now? If we still like the trade, we still think it's still working for us and we want to elongate the trade. Yeah, that's when we might say, yeah, let's roll that. Let's go get a contract maybe a little further out. Maybe, who knows, maybe it'll last as long as this run did. Here we got that was June 11th. So we got a good 6-7 weeks out of that one. Okay. And we could try to do that again. Okay. So your choice, and I want you to vote on this. I want you to vote. Do we just exit and take profits? That's choice one. Choice two is, do we sell a call against it and just bring in a little bit more premium? Or do we roll it? Okay. Meaning take the profits on our long option, buy something a little bit longer dated, and drop our delta. We wouldn't stay at a 93 delta. We would be dropping our delta down to 60 something, which answers your question, John, about what was the delta when we bought it. It was kind of like the first 60 something delta. So it was probably a lower 60 something delta when we got into it. Okay. Or the fourth option is we could roll it and sell a call against it. Okay, so 4 choices. I didn't tell you the fourth choice until just now. Okay, so the fourth choice is roll it and sell a call against it. Okay, what do you guys think? Roll, roll, roll. I'm seeing lots of rolls here. Gina says a call. Okay, so selling another call against it. None of these answers are going to be wrong. Okay, the only answer that would be wrong maybe would be, stick your head in the sand, right? We're not going to stick our head in the sand. Okay, David likes sell a call. Bill likes a roll. John likes a roll. Okay, so maybe roll and sell a call. David's like, okay, if you're going to give us that choice, that's what I'm going to choose. Let's do a roll and sell a call. How many of you would feel okay about that? And having us be able to experiment with this and see how this works. I love that AMD did that for us. We never know when we put on a trade if it's going to go the way we expect it to, or if it's just going to reverse on us. We just really don't know. At the time that we were selling calls against it is when we took off our stop losses, for those of you that have that question. Okay. Now, Scott says, what we could do is sell it and then put in a conditional buy if it goes back over the high. Okay. That could be maybe like a modification of the roll it, right? Now, Michelle says, what option metrics can you take into account before deciding whether to roll or not? The big one there, Michelle, is going to be the delta. Where is the delta right now? And because it's a 90 plus delta, that's why I'm letting you know that the leverage isn't working for us as much as it was a while back. Okay, So that is one of the big things. And the other thing I'm going to say is days before it expires. Now, this has plenty of time before it expires. 115 days. Yeah, it has plenty of time here. Let's see what else is available on this. We've got November, we've got a December, we've got a January. If we wanted to kind of roll it and kind of treat it like it was in the beginning of the trade, we would come out here to this January. We could go out here to January 16. And we could do the same thing here where we say, all right, let's capitalize on that. Let's take our profits and buy another contract with it. And because the stock is up a little bit high, might be reversing, sell a call. Okay, so we're going to do two things here. And I lost my pen. Let me find my pen. Here's my nice writing pen that I got from Spain. All right. So let's do here. Let's go to the January. And the first 60-something delta is this one right here. It's going to be the 175. Okay, so that's what we're going to roll the long one to. Now, which one should we sell? Well, we're not going to want to sell out in January here. We're going to pick something probably a little closer, right? So we may pick, we could come out here to the August 15s, and we know we're going to be at a 175 long contract. And so, what's something beyond that, maybe a little bit more out of the money? We could look at selling, say, this 190. Stock's at 177. Option would be in play for 17 days before it expires. So we could look at maybe bringing in 355, 475, just kind of depending on what you felt like there. Let's go with the 195. So let's go with 195. Let's sell $3.55-ish. I'm noticing here at the end of the day, the spread is widening out. Normally during the day, this is a lot tighter. But when the market closes like it does now, we get all these orders that come in and it just changes the buy and sell prices. And then usually first thing in the morning, right before the bell, tells us it's time to start, then they cinch up and are closer and are more, I'm going to say normal, okay, in their tighter range. Okay, let's see. Ben says, roll it for credit or forget it. Tartar Apple says, should we sell a 180 call and buy a December 160? That's a possible combination. Yeah, 180 would definitely be out of the money. Okay, we're looking in August here, so it's a little bit higher delta than some might feel comfortable with, but you certainly could. Okay, yeah, it's at a, well, let me get on the right line. Yeah, it's a 49 delta. So many times when people are selling calls, they might look for something a little further out. They might look for a 30-something delta or a 20-something delta is a common, range, but you could do whatever you wanted to. John says AMD could go for an all-time high of 220. It could. Okay, so first things first, we're going to do our roll and then we'll sell the call. Because we don't want to have a naked call sitting out there, although neither of them would actually execute till tomorrow. So on our monitor tab, we're going to just show you this action. We are going to say create rolling order. Okay. And it doesn't know what we want to do. It really doesn't. What it does know is our November option. It knows what our November option is. It knows we bought it. It knows we need to sell it. And because we want to buy something else, it just grabs the next month in sequence, or if it were on a weekly, it would just grab the next week in sequence. Okay? Because it's not a mind reader. So what we're going to do is we said we were going to take the January. So we're going to go out here a little bit. Then we're going to do the Januaries in the new year, 2026. That sounds a little odd. And then we said we're going to look here at the 195, I believe, strike price. Connie has bad handwriting. And I can't remember if it's 195 or 175. So I'm going to have to go look here, okay? Our first 60-something delta Okay, my messy handwriting, the first number was correct, the 175. Oh, it's the 195 we're going to sell. That's what the other number is. Okay. Yes, so we're going to change this to 170. Oops, wrong direction. Let's grab this. 175. There we go. Okay. So it's showing us here, basically, our profit that we had minus the cost of this new option. Looks like it's going to roll it there for about a 35 credit. Now, if you are somebody you're like, I'm not comfortable doing a roll. I'm not comfortable doing it this way. I'd rather do it in 2 steps. Do it in 2 steps. That's fine. It's the same thing. The reason rolling became big is because when commissions were priced differently on options, and you were charged a base number plus 65 cents or whatever on a contract, then it became very popular to do it in one trade together, which we call rolling. But if you're not as comfortable with that, just do it separately. Not a big deal. Okay. Will says you still got me laughing. Maybe that wasn't towards me. So Cia says, is this a calendar spread for AMD? It looked like that when we put it in, right? It said sell calendar. And right here it says diagonal because we changed the strike prices. So yes, technically that's what it is. It's a diagonal spread, but quite honestly, we're just selling off our long option of November 120, and we're going to buy this new one January 175. Okay, so that's why I'm saying if it kind of bothers you, don't, or you're like, that confuses me, don't worry about it. Okay. All right, we're going to send this puppy in. And right now it's at the midpoint price, 35.40. Okay, we'll just go with the midpoint price. I'll make sure this gets filled in the morning. Okay, guys? Okay, that's part 1. Part 2 is we're going to go sell the option. Actually, do you know what I should have done here? Let me change. No, I'm going to leave it alone. Let's come up here. I was going to say maybe we should have done a conditional order that said, and after you do that, then go sell an option. And really, you could sell anything in here. If you wanted a little bit bigger premium here, maybe sell a little bit further out of the money, you could come out here to one of these Septembers. You could come out here to September 19, bring in a little bit more credit, possibly for a little bit more time. I'm going to stick with the August one because I want to be really active with it. Okay, I want to keep track of it. I want to be active with it and sell calls against it that helps lower or decrease that net debit on it. It's not going to show up here. I mean, it shows up here in the numbers, but that credit that we're booking on that roll, it's not going to show. What it's going to do, it's going to start over. Okay, now you bought this January option. This is what you paid for it. And then it's going to start keeping track of it based on what that value is. Does that make sense? Okay, so that's why we're doing it. I want you to be exposed to it because really, you might need a trading journal, which Cameron talked about in one of his earlier classes today, getting started with options. In fact, if you're looking for a trading journal, Cameron did a great thing in that class, showing you where you could go download a trading journal. And this is one of those things you would want to track in the journal because this credit we're getting, we're not going to see it again. I mean, it's in the numbers, but we're not going to see it on our P&L open. It'll start it as a new open position. Okay, so on the August one here, I had written down 195. Let's see where 195 is, right here about this 28 delta. All right, let's go ahead. Again, I expect this to cinch up a little bit. We're going to go for the midpoint price here, maybe bring in 4.15 for selling that call. And we're going to send it on. Okay. Did I answer all the questions along the way? Did I get those questions answered along the way? If not, send them in right now. All right. That one was a little bit more detail on the trade here. So that is going to be our only follow-up. I will tell you, I'm tracking some of the other trades. Micron, we're down a little bit. We're just going to let it work out. It's not the end of the world on it. Okay, on our little Micron trade here, which is a short. No, actually, this is a what do we do on this? A long call vertical, I think. It cost us. No, this was we went bearish on this. This is our one bearish trade we have it in there. Brought in a 60-cent credit. It's going against us a little bit, 66 cents, but nothing too awfully disturbing. Okay. All right. Let's see, Laura B. If Laura B's in here, this is a comment that Laura B made. Nathan says, sorry, why didn't you do the covered call in just one order? We could have put it in as a combo order, but I wanted to keep the rolling action separate so you could see it. And so that's why I chose to do it that way. But if you wanted to change it and say custom order and sell the call at the same time, you absolutely could. Okay, good. Tart Applesauce says, did we sell the 195 call because you think the price will go down short term? Yeah. Had this nice little run up. We've got a candle here that's fatiguing today, right? It ran up. It has a kind of a taller shadow here. And we would call this maybe a shooting star. And what we would look for confirmation of that is a candle tomorrow where the price action comes down. It might gap down or it might just, go down a little bit, might go down a lot. But basically a bearish candle tomorrow would confirm this shooting star. All right. Nothing's ever guaranteed. AMD could have wonderful news and it might shoot past it, right? Certainly could happen, but that's the general idea. Okay. I was going to do something. I think I'm going to maybe pass on one of the things. One thing I wanted to show you that I did when we were talking about the markets is I wanted to show you SPX A50R, which shows us how many stocks are above its 50-day, how many S&P stocks, S&P 500 stocks are above their 50-day moving average. And what I just wanted to show you is that each week it's kind of getting a little bit lower and a little bit lower. The peak here is getting lower and it's putting in a little bit more lows. So right now it's at about 65 where it closed the day. Last week in our class, which was the 22nd, it closed at, where's that closing number? 73%. So 73% of those stocks were, now it's down to 65. And so Scott's comment earlier was like, I'm just feeling a little uncertain about what might be going on. It could just be things are slowing down a little bit. Okay. With that in mind, we're going to take a look. If we have time to do both of them, we will. A couple of calendar spreads on stocks that have already announced earnings that have kind of picked a direction, but we're not expecting them to move really big. Okay. I'm going to take the market forecast off our studies for now because we're not going to use it. And we're going to clean up the screen, just leave on our blue 10 and our red 30-day moving average. And in here, we are going to put in our first one. We're going to put in Google. Google had their earnings. Their earnings are out of the way. They had a nice reaction to it, right? Here's where they closed, and then the next day they gapped up, kind of pulled back, but since then it's moving in a bullish direction, right? It's kind of, it moved past, its low point on the day that it gapped up as of today. So if we think the market might be maybe slowing down a little, which is kind of maybe what might be going on, we're never sure. We're going to be a little bit more neutral on the trade selection, and that's why we're going to look at a calendar here on Google. Okay, if we go back to our slides, which I won't, you'll notice they are in the neutral column over on that far right, our calendars. So what we're going to do here, we are going to use 2 time frames and the same strike selection. Okay, So on a calendar, we're going to have to spend more time with this next week. But on a calendar, typically you determine what month you want to sell first, and you kind of decide in your mind, well, how far out do I want my long leg? How far out do I want my short leg? Okay. Our long leg, we're going to pick the 19th of September. And the one we're going to sell, we're going to look in these liquid ones. Okay. It's a little bit short on the time, but Google's kind of an expensive stock. So there's still a little bit of premium there that we can take advantage of. And earlier, I was looking at us doing the 200 strike price. Let's see if 200 still looks good. Many times on a calendar, you might want to go a little bit out of the money. Maybe not a huge amount, but a little bit. Okay. And the consideration when you're choosing your long leg, you've got to have the same strike price available. Sometimes you might find that you don't. Okay. So here's our 200. This is the one that we're going to aim to sell first, but let's make sure 200 is available here out in September. Scroll down. And here is 200. Now, the September option or the August options are selling in $2.50 increments, but they're not out here in September yet. As these get closer, those might be introduced, but right now they only have the $5 increments. So that's kind of why we're checking it out, making sure it also has a 200 available. And what we're looking to do is go slightly out of the money, right? It's at 195, 200, it's just up a little bit, what, $4.75. So it's not like way up, but just a little bit. And when we put this trade in, we want to start with our sell leg. So we're going to come out here to the 200 and we're going to do a right mouse click. We're going to say buy calendar. Now, again, it doesn't read our mind. It doesn't know how far out we want to go. So it just grabs the next month or week in sequence. And then we're just going to come out here. We're going to change that to the 19th of September. Okay. It's going to run us about 353. We're going to do a quick analyze here. If you are not familiar with the analyze tab, that's okay. Basically, this is giving us an idea of kind of what our range might be of profitability. Okay. And the one that's this green line is our options expiration date. This kind of pinky purple guy is as of today's date or the date down here, which I've got it set to today's date. Okay. So peak, if everything went great on this trade and it closed at its strike price, looks like maybe we would be in the range of about $362 profit. How likely is it that we just nail the thing right on options expiration date? Probably not. Okay. So we're going to look for it maybe to be in a little bit of a range. We're going to have to wait for time to decay. So we have that little piece working for us. And if implied volatility happens to go up a little bit, that would help our long leg. We don't know. Okay. But we're looking for it to not make a very big move in here. Okay. We'll go ahead. Let's just do 3 contracts here. And I'm going to send these in. We're not going to put an exit order on it. We're going to hit confirm and send. We're going to send it to our option strategies bucket. And we're going to send that on. Now, after our class is over, there's one more that I want to put on. I'm just going to show you what it is, but we won't have time to put it in together. But just know this is what I'm going to put on. We're going to do a similar thing here with Pepsi. Pepsi had their earnings. They gapped up. It was good news. Looks like it's holding this area. Nice bounce off of this perceived support here today. We're going to do another calendar. We're not looking for a big move. They've already had their earnings. And so on Pepsi, strike price there, we're going to do a call calendar on it as well, because it's a little bit more bullish than bearish. So that's why we're going to do the calendar and the calls. We're going to look to do this one here at the 145 strike. Okay, so here's our Pepsi, 145. I've already checked, and they have those available out in September. This one's even a little trickier because you've got $1 increments and they don't have $1 increments in September. That's one of the reasons we're going with the 145. So we're going to say by calendar here. We're going to select, we're going to do 3 contracts here. Notice it's just a $1 wide here, but I've got to change this to September. Okay, it's going to be a little different price, about 155. And we'll monitor and spend some time on this one next week as well. And I'll be monitoring it throughout the week. Now, my time is up, but I think we covered a lot of ground here today, guys. We talked about rolling that AMD, which we really haven't had a lot of situations where we could do a rolling strategy. And then we just put on 2 calendar spreads that we're going to monitor with the idea that, you know, maybe the market's already priced in what the Fed's going to say. We'll all get to find out together if that's the case tomorrow. We'll find that out. And then we focused on a couple of call calendar spreads. All right, this is the last class of the day. I don't believe we had a survey out there today, but you guys follow us and subscribe. When you subscribe to our Trader Talks channel, it just makes it easy for you to find our content. In fact, I think it's right here, right? You can see our playlist. You can see upcoming events, see what's going on. Tomorrow morning will be the Trader Talk in the morning. That'll be Kevin Horner and Brent Moores that'll do that on that Wednesday morning Trader Talk. So if you're a subscriber, I like that in YouTube. It just helps you find what you're looking for. So have a great evening, everyone. We will see you bright and early in the morning. Remember, I'm Connie Hill CS. Cameron's Cameron May CS. Cameron, thanks for helping me out in the chat here today. We'll see you tomorrow morning, everyone. Bye-bye.